When it comes to buying your first house, it can be super exciting, but it can also be super scary, guys, because you don't know exactly what is coming, what expenses are going to come with it. So we're going to look at first-time home buyers, and I'm going to give you some tips and tricks that I've learned going through and living as long as I have, moved to a lot of different places, and we did build our own house a couple years ago. Number one, start saving early. This is going to be the big part, guys, requiring the down payment, trying to put at least 20% down. Now, what you want to do is you do want to avoid the PMI. Now, some of the loans, of course, you only have to put 3% down, but a lot of them you do have to carry the PMI, which is private mortgage insurance. Essentially, you're carrying insurance just in case you default on that mortgage, or if you're putting a certain percentage down, you can eliminate the PMI, not only giving you a good equity position because you are putting the 20% down, but in addition, not paying that PMI, which is just an extra bill tacked right onto the house. Now, there also is closing costs. Roughly 2 to 6% is the closing cost for an average house, depending where you are. Sometimes you, as the buyer, do have to get them or pay them. Sometimes if there's a seller, they can give you concessions. There's a lot of different ways to spin it, guys. And then, of course, you have realtors as well as financial institutions that are funding the loan. Now, in addition to that, you have to remember the move-in expenses. The cost of moving, if you're not doing it yourself, is around $2,500 for local movers. If you're going long distance or out of state, possibly out of country, this could be a lot more expensive. In addition, you have to set aside a little bit of money because you could have home repairs, you could have upgrades, you could have furnishings, you could, want to paint the place, you might want to put in new carpet. There could be a ton of things that you want to do to the house before you actually move in, because especially if it is vacant, it is a really good time to get in there and update and change a couple things before you start moving everything. Number two, deciding how much home you can afford. This is where the budget comes in, guys. When you look at what you're paying, how much can you afford? It is not just the payment and the interest. You also do have to keep in mind the insurance that you do have to carry on the home. You also have to keep in mind all of the expenses that come with it. Now, with that is, of course, the utilities, guys. They can be very expensive. And also, if you're looking at lawn care, if you're looking at maintenance, if you're looking at water bills, there's a lot of things. If you're coming from, let's say, a condo, or if you're renting a place, or if you're coming from an apartment, there are a lot of bills outside of what you normally pay that you're going to have to cover when you do move into your house. Number three, polishing up and really fixing up the credit score. There are minimum requirements for mortgages, guys. You have to make sure that your credit is in check, and the higher the better credit score you have, which means, of course, you can get a better rate, just like lenders traditionally do. The worse your credit is, making sure that you qualify. You want to make sure, of course, that your credit is on par. And you also want to make sure your debt to income ratios, because again, similar to credit score, debt to income ratios cannot be outside of a certain guideline, or you are not going to qualify for the mortgage, making sure that you know exactly what you're getting into. Number four, we look at your mortgage options. So this is the type of mortgage you're getting. A lot of people do start with conventional mortgages. Again, if you're not putting that 20% down, the conventional mortgage is going to have to carry that PMI. But there are also FHA loans, which is the Federal Housing Administration, that allows little down payments as 3.5%. There are also VA loans. So a big shout out to all of my fellow veterans out there. You can do a VA loan, which requires no down payment, but I do not recommend, guys. I feel like if you're going into a loan and you're really trying to maximize the amount you're doing in there, having a down payment is very good, just because you want to make sure that you're getting in a good equity position and that you're not borrowing 100% of the house you're moving into. Now, in addition to this, guys, there are a lot of local programs that a lot of people qualify for. There's some that are low income based. There's a couple different options. So make sure that you're talking to your lender and figuring out exactly what you're doing. There are also, of course, 5/1 ARMs. There are 7/1 ARMs. There are fixed mortgages, really a plethora of mortgages. Do your research. I cannot stress this enough, guys. You have to do your own research. You have to know exactly what you're getting into and what kind of loan you're getting, because we've seen some really kind of questionable lending practices from other institutions throughout the years. Number five, research your first-time homebuyer assistance programs. This is really good. They do a lot with the down payment assistance. Now, what I really caution you on this note is you can borrow from retirement funds. You can borrow from a lot of different places as a first-time home buyer to come up with more of a down payment or the down payment assistance. Now, I really caution you against doing this, because if you're borrowing from your retirement plan, even though you don't have to pay it back, that retirement plan was earmarked for retirement. That was not meant to set aside for your home. That was not meant for a down payment for your house. It was set aside for something specifically, which is retirement. So dipping into a bunch of different things can be really detrimental long-term when it comes to not only are you borrowing money, but you're also borrowing money from other places that you're going to have to kind of account for when it comes to your finances in the future or when it comes to retirement. Make sure again, guys, that you're getting the house that you can afford. Number 6, we get into comparing mortgage rates and fees. This again, something that you absolutely have to do, guys. The origination fees, the interest rates, even the closing fees, the appraisal fees, this can vary incredibly when it comes lender to lender. There is a big variation of what a lot of places do, roughly getting 3 to 5 different quotes from different financial institutions. So what I mean by that, guys, is go to your traditional banks, get a quote. Go to your local credit unions, I would get a quote there, and then go to the larger ones, looking at like your Rocket Mortgage, looking at your Wells Fargo, looking at some of the nationwide lenders and see exactly what they offer. Compare apples to apples. You have to make sure that you're getting the exact same product at every single lender and seeing exactly what the cost, because even a lot of lenders will allow you to buy discount points so you can actually buy down your rate, or they waive closing costs if you meet special conditions. We even see where education programs can waive appraisal fees, which can save you a couple $100 over the long run. Number 7, gathering all of your paperwork. This is important, guys. Proof of income, employment status. You're going to need tax returns. You're going to need bank statements, retirement account, brokerage accounts, debit card payments, student loan payments, auto loans, real estate, everything that you need. And also addition, any documentation that could affect or impact your finances, divorce, bankruptcy, foreclosure. They want to see everything. When you do a mortgage, traditionally, it is probably one of the biggest purchases that you will ever make in your life. And 2, it requires the absolute, probably most paperwork that you'll ever have in your life. So everything that you can think of, from the bank statements, again, brokerage accounts, W-2s, payroll information, you want to gather before you work with a lender. Most of the lenders are going to want proof of income, which comes from pay stubs, W-2s, 1099s, tax returns, before they will offer a pre-approval. So a majority of them can do a pre-approval just based on credit score and income. And when you actually get into the nuts and bolts, guys, you want to make sure that you're going to get approved for the loan that you're looking for. And with that, number 8 is getting the pre-approval letter. This will tell you exactly how much you are pre-qualified for. Now with this, guys, again, really a bit of caution. When we went to do our mortgage, they approved us for about $600,000. When we looked at our budget, there was no way that we were ever even going to get close to that. We actually ended up doing our house for less than half of what they approved us for with a pre-approval letter. Again, don't worry about what you're pre-approved for. Know exactly what payment is going to be comfortable for you, and then shop in that range. That is really the good way to do it, guys. If you're looking to stay, at a $1,200 payment, you might be shopping in the $180,000 to $200,000 range, which, depending in your area, which can vary greatly, you want to make sure that, again, you're fitting it into your budget exactly where you are. Don't rely on the lender to tell you exactly what you're qualified for and the lender to tell you exactly what payment you can afford, because they are making a lot of assumptions on your behalf. And a majority of lenders will go ahead and they will overstate what you can kind of qualify for, which I do not like at all. You don't want to be house poor. You might qualify for it on paper, but then again, when you're spending, 30% of your income on your house or more that we've seen, it makes it incredibly hard to live the rest of your life. Number 9, choosing a real estate agent carefully. This again is one of these super, super tough things, guys. Go through an interview process. When you think of a job application, go through an interview process with your agent. Look at their track record. Talk to people that they have sold houses for before, really getting into the market and understanding most of the places that do pre-approvals, most of the financial institutions do have realtors that they use. They do have realtors that they have partnerships with, because it does go kind of hand in hand. So you can make sure that you're getting set up with people. It's not just opening up or doing it online to see exactly what you want to look at, or using, recommended realtors from just an online source. You want to make sure legitimate people that you've worked with before. Number 10, and this is one of the big pauses, guys, that we really get. Narrow down what type of house you're looking for, what neighborhood you want to live in. And over this, guys, I would also put in there what school district you want to be in. How are the the schools within the district that you're looking in the neighborhood you're looking to get into, because not only it might not affect you right now if you don't have kids, if you don't even plan to have kids, because a lot of people do look at this factor. So even the retail value or the resale of your home, if you do have it, you move in a couple years. It's very important to keep that in mind, guys, because if it's in a really good school district, which we do have one out here, a really strong school district will attract a lot more buyers at a lot higher price point, even if you look to move in the future. Now, also, generally, newer or existing homes are going to be cheaper than the new construction. New construction always comes with a much higher price tag. But again, like I said, we built our house. Now, the reason being, guys, when you start getting into homes that are 10, 15, 20 years old, you start looking at big ticket items. And again, this is something to really keep in mind. When you're talking about big ticket items, we're talking about roof, we're talking about window, we're talking about furnace, AC. These are major ticket items when you're looking at houses that are 20 years old. It might be time where, hey, you're getting into a house, you got approved, congratulations. Now you got to spend $12,000 or $15,000 on a new roof, and you got to spend $10,000 on your furnace because it's not running too well. Make sure, guys, that you do a home inspection. I would never, ever buy a place unless you're doing a home inspection. Make sure you know what you're getting into, especially when you look at condominiums, single family homes, when you look at, do they have an association, manufactured homes, if you're doing fixer uppers, know the neighborhood, know what you're getting into. Do your research, guys. I know a lot of people that look at houses, and then when it comes down to the nuts and bolts, they really don't know anything about it, which is super, super difficult. And number 11, my personal favorite, guys, stick to the budget. Set your price range. Know exactly what you're looking for. Know exactly the price tag you want to go in. Make sure keeping yourself out of bidding wars. We have seen that over the last 12 months, where a lot of people will see a house that's $200,000, ends up selling for $240,000, $250,000, $50,000 or over, a huge percentage over what it's valued at. Then they do the appraisal. The appraisal doesn't come back at 250. Well, now you either have a choice of bringing money to the table or the seller lowering the price of the house. It's kind of crazy what we see out there. But again, a lot of people are playing games when it comes to these mortgages. Make the most of walkthroughs, and open houses are number 12. Take the 3D tours, guys. Get your real estate agent to go through there. If possible, buy a house that you have seen, that you've walked through, that you know the feel, you know how the carpet smells, you know what has been in the house. This is very, very important, guys. This is where a key real estate agent comes in, making sure that you know exactly what you're doing. Now, number 13, don't skip the home inspections. We talked about this a little bit. They have uncovered so many things, guys, from looking at mold, looking at pests, looking at radon, looking at lead. There's a lot of stuff, especially when you're getting into older homes, that you really have to make sure that everything is on par with that. Number 14, negotiating with the seller. That is right. If you see things that need updated, if you see things that need repairs, these can be negotiated. These can be line items on the closing that, hey, they're putting some money towards the closing cost, or they're giving us a rebate to go ahead and repair the roof, repair the furnace, whatever it may be, or they could choose to fix it themselves before they go ahead and sell that house. And of course, the last one, guys, home insurance. Make sure, honestly, in this one, you're overbuying the home insurance. Home insurance isn't super expensive when you look in its entirety. It's rolled, for most of us, rolled into the mortgage payment. But if you're paying an extra $50, $100 to up your coverage over the entire year, what is really, $10 a month that you're going to get the peace of mind of having the homeowner's insurance? Always look at possible flood insurance if you have a finished basement. If you have anything specialized that is in the home, solar panels, anything of that nature, make sure that you do have enough home insurance to cover it in the entirety. And a lot of people also do carry an umbrella coverage. I do myself, guys. The umbrella coverage is like $78 every year, which is kind of crazy. Covers, I think it's close to $250,000 above and beyond the normal homeowner's coverage, which can make a really big difference when you're getting into first-time home buyer. It's not the things that you really want to cheap out on, because again, in the long term, they can really come back and bite you if you don't have insurance and something does happen on your property as a first-time home buyer. So guys, that'll do it for the video. Let me know what you think in the comments about the first-time home buyers. Consider subscribing to the channel if you like the content, and I'll catch you in the next video.